Welcome to episode 222 of The Numbers Game. I'm Jace. I'm here with Nick and Marty. How are you, fellas?
Going well.
Going well, mate. More to the point, how are you? You okay?
Oh, mate, it's been tough. The YouTube comments have been blowing up. It's
I'm actually worried about your safety. I'm actually worried about your safety today. I'm glad that you look good. You look good, but you've definitely caused a stir, mate. You've definitely caused a stir.
Yeah, I've moved to a different podcast studio just so people can't find me. The YouTube channel has been blowing up. I've caused a stir. I want to talk about why, and it's because I said we should raise GST. It's got people upset.
Jace, we don't want to have to cut the comments off YouTube, so just tread carefully with this. I know you're excited about it, but, we want our fans to be right and stuff. So
I'm going to get into it straight away. Raising the GST is a big thing that I've advocated for a long time. I'm not in government yet, but one day when you're voting for a new prime minister, I think I'll be there one day, and I do want your votes. And I know that raising GST is actually political suicide. So you're going to have to hear me out. The next part of raising GST that my friend Daniel on YouTube didn't hear me out on was that we lower income tax so that if we're going to reform tax in Australia, more GST, lower income tax, I think it makes a more even playing field for our economy, and it encourages people to do business here. And I think that's what we're lacking at the moment with, when we go through the numbers during this app, you'll see that there is quite a bit of an icky tax situation in Australia. We pay a lot of income tax. GST, if we're going to unpack it a little bit more, we are probably amongst the only developed economy in the world that has never raised GST, often known as VAT in other countries, or consumption tax. GST has been 10% since 2025, when I believe our good friend John Howard brought that in. I think I was like not that old then, but Marty, yeah, can you tell us about the year 2000? Was it John Howard?
You blokes, I tell you. It caused a big stir, and then some things had GST on it, and then other things like fruit and cake didn't, and people were confused and no one could explain it. And at the end of the day, it had to come in. So but geez, it caused a stir at the time, I remember.
Well, and look, in a real life story, it was amongst the reasons my dad decided to shut down his business. I mean, he just went, this is too complicated. I've got to charge, little Nana Susie down the road. I mow our lawns. I've got to put my prices up so that I still make the same amount of money. She doesn't have the spare $2.50. It used to be $25 to mow our lawn. Got a bit confusing, and Dad was like, bugger it, I'm just going to go get a job. And it was probably one of the things that stuck with me as a kid that went, I can help business owners because I can understand numbers. And I just think having a simplified tax system makes it easier for everyone and encourages people to get into business and learn their numbers. And we talk about it a lot on this show. I do understand, though, contradictory to what I just said, if we change GST from 10% to something like 12.5 or 15, all of a sudden it's not as simple as adding 10% to whatever you charge. I'm worth $100 an hour. I now have to be GST registered. I'm 110, obviously, at $100. It's pretty easy to work out. But I want to take you through a couple of numbers around what I think would, the reasons why it needs to work. But also when you compare to other economies around the world that have lifted their GST or their VAT, how our income tax rate then varies to what they are paying. So that's actually the way it works, because we can't increase GST and then take more money off people that are paying high rates of tax. Before we crack into that, though, I mean, you guys have heard me talk about GST, raising GST for a long time. You're both on board. Anyone want to kind of go against my random idea of tax reform?
No. To me, it makes sense, because
You're in?
The more you spend, the more tax you pay. So the wealthy people are going to spend more and pay more tax. The people with less money are going to spend less and pay less tax, as long as you balance it out on the income tax side. To me, it's an absolute no-brainer. It actually, the tax is actually spread across in a way that it means people with more money pay more tax.
Yep. So what do you say, that people earning more money will just invest and be richer? They won't actually give in to spending more money in the GST system.
They'll still spend more money, mate.
Yeah, that they will, no matter what. But I think too, like, if you're giving people more money by reducing income tax, they can make decisions as to where to spend that. So they've got choices in regards to it. They'll still spend, but it gives them choice. And if people are buying, then I'm a big advocate of reducing pay tax. I just feel like it needs to be simplified. And I've always said I've gone from 20% business tax and individual tax to 15% if you raise the GST. And again, the threshold of, and I've brought this up, I think 50,000, if you had no tax up to 50,000, I think that helps out a lot of people, and as long as you've got a lot of welfare behind it when needed, that helps those people as well, not get just giving money to the government, and it's probably going to be less demand then from the government needing to spend on them potentially if they have more money at their beck and call. So big advocate of that.
For those actually, the episode we're referring back to is home ownership a fantasy in Australia? So that was where we talked about that. And then why I bring that up now and why that's relevant, I want people to keep going back to that episode because it is booming and you can hit the comments and get stuck into me, myself, Nick and Marty. But there's another comment around capital gains tax. So again, we've got in our country, your main residence is exempt from tax. So you get your main residence, your primary place of residence goes up from $1 million to $2 million over 10 or 20 years. You get all that gain tax free. We were then talking about residential investment properties. If it's not your main residence, you get the first half of every dollar you make on that tax-free, as long as you've had it for more than 12 months. So this is another area where our property prices are jacked up off the back of people then being able to spend more money and make more money off property. So supply demand type scenario. If we were to, there's a comment around lowering income tax, but having capital gains tax on all gains on property. Now, again, I'm not talking 45% or 47%. This is where Marty's idea of having a flat rate of tax across the board then means you're evening the playing field again, because this idea that the rich will get richer because, they're going to keep investing. Investment growth is where people pay some of the lowest amount of tax at the moment because of the 50% CGT discount. So again, if we're trying to create a fair tax system for all, that is also another area that they need to do a full tax reform. This isn't just me coming out saying raise GST so the government collects more income, but we also need to find a way to go, if we are going to lower income tax and make the tax system more simple, then it needs to be looked at as not just income tax and the marginal tax rates, but also capital gains tax, which I think you guys probably hear a fair bit about capital gains tax in the financial planning and mortgage broking world.
Yeah, I don't mind taxing all property. I actually don't have an issue with it because whether you're living in the place or not, it's an investment, and that investment is increasing because of what's happening around you. Such as, population growth, infrastructure, things the government's spending money on. I think as long as it's taxed in a timely manner, so meaning when you've got access to the money, such as when you sell it, or maybe when you pass away or something, there's some kind of, tax. I know some countries tax based on the annual growth, whether or not you've realised it or not. I don't like that because you haven't got the cash flow. It's a little bit like the land tax here in Victoria. You're getting taxed substantial amounts when you haven't actually realised any value out of that asset yet. So, yeah, I don't mind it because
I actually like it. Yeah, when Jay said it, I'm going, what's he talking about? And then I go, the more I'm thinking about it, I'm going, that actually could work, really, really well.
Well, and again, I mean, we've let in with the whole up GST type thing, but then the only way to make this successful is to make it a place where people want to do business as well. So there's more income tax being generated. And there's another point here, which always makes the media every year when the biggest kind of ASX 200 release how much tax was paid. And a third of the largest companies that do business in Australia, think Qantas, Virgin, Google, Facebook, they almost pay no tax in perspective to their amount of revenue. So all we'd have to do is create an environment in Australia where it makes sense to pay tax here rather than shooting profits offshore to, let's say, Ireland, where it might be 7%, 9%, or Singapore, where it might be 11%, just, using some random examples. If it's 25% here for small business or 30% for larger business, why, if there's a way where you can send the money to be taxed elsewhere, there are other economies and governments around the world collecting money that Australia could be collecting if it was smarter with this tax system. So again, imagine flat 20% as an example.
Makes no sense in charging those higher tax rates if, again, you think about how much money is spent on tax minimisation, that if it was flat across the board, and everyone was paying the same and at a low rate and a competitive rate, they would make so much money, the government. They would absolutely rake it in because it's commercially, friendly and inspiring, and it'll increase productivity. They'll be doing more rather than trying to go into all these millions of dollars of tax minimisation strategies to not pay tax.
Well, that's it. And maybe the Facebooks, the Googles, Qantas Virgins, they're fancy accountants and accounting teams that are being paid hundreds of thousands of dollars to move that money around legally. Maybe they don't have to invest that money anymore doing that because they can leave the money parked in Australia because it's taxed at a better rate.
And look at the billions of dollars of profit that would be sitting in those businesses somewhere,
Yep.
Somewhere.
Yep, spot on. I would like to take this opportunity to share some numbers with you guys. You got to follow with me, and we're going to try and pick out some of the crazy ones here. I'm going to start with Australia because this is where we're going to be able to compare against. So GST 10%, and it's never moved. If you earn more than 100, and then tax rates between 18,000 tax-free, but as soon as you're over 190,000, you're paying 45 cents to the dollar. So on 190 grand, you lose nearly $52,000 straight off the bat. It's a fair whack. So that's 51,000 because you tax 37 cents, 30 cents, whatnot of the brackets. And then every dollar over 190, you're giving away 45%. And if you don't have private health insurance, actually 47%. So I want to compare, and I've translated all this using the exchange rate from the 14th of Feb. So if anyone wants to go and check my numbers, let's go to the UK. They have 20% VAT or GST, but you're not taxed 45% until you earn $296,000 or more. So all of the rates below that is basically a flat 20% up to 100K and then a flat 40% up to 300K nearly.
It's in the UK, is it?
That's the UK, yep.
Wow.
The exchange rate's pretty bad at the moment, so that makes it probably more dramatic. But I mean, in AUD, the comparison is nearly $300,000 before you start paying 45 cents to the dollar in tax. So again, all of a sudden, our 190K tax bracket doesn't seem like a lot. Let's go to Germany. And they've basically increased VAT in the UK since 2011. I think it jumped up to 20%. So they've had increases over their history. Germany's VAT is currently 19%. So again, they're paying nearly double Australia, same as the UK. The top marginal tax bracket in Germany doesn't go to 45% until you earn $457,000. But in Australia, you get to 190, you're losing 45%. France, VAT 20%. Again, they're paying double the amount of GST or VAT we are. Top income bracket, 278,000 or over. And the one that's probably most similar to us or worse off, Canada, they actually moved GST from 7% back to 5%. And their top tax bracket, though, is 169,300 for 33% or more.
Yeah,
so
it's still better, though.
Yeah. I mean, you're paying less GST, and then you've also got lower tax brackets overall. So, that doesn't have the extreme polar from 190K like they have with those other examples. The US, though, the US is a minefield. So I'm not going to go into the VAT or sales tax in the US. That varies hugely all over. But I did want to give you the US federal income tax brackets. So you pay your 10% flat tax up to 17,000 or 11,600 USD. And then it's 12%, 22%, 24%, 32%. So I'll kind of skim over those smaller brackets. But your 32% tax bracket cuts in at 540,000 USD or more. Their highest marginal tax bracket is 37%. You have to be earning, and I'll translate this to AUD for the effect. It's basically just under $1 million before you start paying 37% or more marginal income tax. They don't have a 45% bracket at all like we do.
But are you paying a state tax on top of that?
There are state taxes and sales taxes depending on where you live. So I've just given you the federal, and again, depending on where you live, that'll vary across the board. So I couldn't give you too many examples. I can give you a California example or something, which is pretty bad, and New York. But I mean, look, let's face it, most people in New York are probably earning the million AUD at least to be able to live there and whatnot. But so I think that kind of shows that if you look at a tax system, and we go back to those first couple of examples where high income earners And again, that means there's more money, they're spending money. The VAT and GST systems where there's 20%. The disclaimer I will say also around France, though, France has a super something rate. It's where what usually happens is, and that example from Daniel on the previous podcast saying that, the poor actually get, slammed with the GST because they're the ones that are still going to have to go and buy all the essentials. France actually has a lower GST rate on essentials. So there'll be a whole bunch of essentials that don't have GST. And then for the other essential items, there might be, let's say in Australia, we left a bunch of essentials at 10% and then everything else went to 20%. If you want to go out and spend money.
You don't need to, right? Because let's say you suggested no income tax at 50K.
Yep.
So that's about a $6,000 saving in income tax, give or take.
Yep.
Is that right?
Yep.
So hypothetically, you've got to spend $60,000. If we get a 10% increase, you've got to spend another 60 to be beyond that. Yeah.
Yep.
So
very good example.
You don't need, again, we're talking about simplifying it, right? You don't, as long as you offset it with income tax, then it can be 10, 20%, whatever it needs to be across the board. So my question is, and you may not have the answer to this, but if it's as simple as increasing GST, offsetting that with decreased income tax, why will no one go out on a limb and do it? Because I know we talk about political suicide because people hate change, but if you can easily justify it with changes that counteract that, such as reduced income tax, why doesn't someone go and do it? They could be the next hero. They could be the next Paul Keating with the super, with super.
I don't have the answer, but my understanding, and I do want to come back to it. I'm going to look it up for a quick catch up on the next step or the one after. But my basic understanding of some of the complications of the GST system is some of it is controlled by state as well, how the money gets distributed. So they'll look at how the GST is collected state by state. It goes to federal, and then federal decide how to cut that GST up. And I think WA is one of the big ones that they contribute a lot more to GST based on money spent over there and what's happening. But then what happens is it goes over to ACT and the federal government get their grubby little mitts on it and they go, let's give more to Victoria and New South Wales. Yeah, the good places that need more of it because, maybe they're not being as well run. And then over in WA, they crack the shits and think that they should be an independent country over there, which, it's got its merits when they're losing the amount of government revenue back over here and saying, well, you're not spending it very well over in the East. Give us our money back. I think beyond that as well. So there's state complications. And then, I just think again, look at the comments in the previous episodes where it's like, you mentioned GST going up and people get real fired up about it. But I don't think anyone's going to take the time to properly at budget level because then the media run with it, right? You imagine somebody comes out for the next election and goes, we're going to increase GST. They'll say, we're going to increase GST and lower, boom, 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 boom. All you'll see in the media is we're going to increase GST and the poor people are going to do it tough without actually unpacking it properly.
Totally agree. But I think there was ever a time to strike. It's now.
Yep. Well,
Definitely.
And maybe it starts with the Numbers Game podcast. It starts with us talking about it. This will get picked up in the media. YouTube comments will blow up. Our subscribers will go crazy. We just, we need to start the conversation, get educated.
Can we get the treasurer to report back to us just to see what the revenue would be and what
I suggest we reach out to Peter Dutton while he's got a bit more time on his hands because he's going to be a very busy man in a few months, I would have thought.
But I'd like to see the numbers. Like, what's the revenue that's driven in if we alter the tax rate, individual tax rate down? The same with the business tax rate. How many more jobs could be created? How much more productivity could be in the market in business? Right, like I said, rather than working our strategies on tax minimisation, there's going to be innovative strategies to keep growing and keep bringing on more and more people. And if the individual gets the benefit of that as well, to be able to put out there in the market, then it's a win-win. And we just got to make sure, obviously, the people who need the support, get it, and that it still filters down the whole system so everyone's okay. But again, we've got to do something. Otherwise, it's the same shit show that's just not working. So someone's got to take a stand.
Yeah, well, look, I go back to it and, I shared some numbers before, but I go, why would every other developed economy increase their VAT or GST or consumption tax, but Australia is remaining behind for 25 years? So, are we not a smart country? Is there not a way that we can put this out to the people in a way they can understand to go, we're actually doing this to make the tax system fairer, simpler, and basically a stronger Australia where more business wants to come and do, or more businesses want to come here to do business and keep their profits here and reinvest here. We have an ample amount of land. We should be making really good, cheap energy, great internet. When you think about some of those basics and go, well, there's other countries around the world that have done that so much better than us. Even the transport system. I mean, I know this is probably a bad one to use Clive Palmer as an example, but I saw an ad that really caught my attention. And it was around fast trains, like a fast train system. You could technically buy a more affordable property in somewhere like a Bendigo, a Ballarat, more of a bigger regional hub. But then if you had to work in the CBD and there was a fast train to get you there in 45 minutes or an hour from the main regional hubs, use Victoria as an example, wouldn't that mean more people could live in regional areas, transit fast due to great public transport? It's little things like that then when you start to, one of the comments again was that Australia's property prices don't make sense. New York and Hong Kong, makes sense that their property prices are expensive because they don't have a lot of land. There's no land left to sell. What do we have in Australia? We've got land, but why then is property so expensive? You're buying little 300, 400 square meter blocks for $500,000 in like hours from the CBD. Why?
Because people want to be in the cities. That's where the action's at. But they've got to make it exciting to be, out in different regions. And like you said, fast trains, access to facilities out there. But you've got to create these super suburbs, that are beyond. And people get in at 400, 500. But it's like getting in at $1 million in Melbourne, or, you know what I mean? It's the quality of the development needs to be there too, that people go, actually, this is a great place to raise a family, sporting facilities, everything else. But Jace, I just before the YouTubers get at you, what about the impact of inflation? Would that be a short-term problem? Is it something that will be ironed out in time? What's your perspective on that from your numbers?
It is a great question. And, we've seen over the last couple of years the dramatic effect of rising interest rates and how that is basically the one mechanism the Reserve Bank has to control inflation. I don't think it's a super successful measure. I think it's always delayed. It would definitely be something to measure though, because that difference in timing of your income tax versus the GST collection would then have an effect on people going out and spending. They're going to have more net money in their pocket, and we're going to have to rely on people spending money on, to be able to collect the GST. There'll be an adjustment time. I think again, that would be where any changes that happen to the tax system that bring in this tax reform is going to come with an adjustment period after. And, the government, the Reserve Bank will be sitting there with their finger on the trigger to either increase or decrease interest rates. But again, until we do it and roll it out, we won't know the overall effect. But fundamentally though, what we are trying to say, and I think you touched on it before, those reduced taxes and more businesses that want to stay here and keep their profits here, invest in Australia means more jobs, which means more money to be spent here in our country rather than it leaving going overseas. So it would definitely have an effect, but we just need to stabilise it over a little bit of time, get to the other side of it.
And I guess in regards to if people have more cash flow available, there could be a concern that property prices might go up because their capability to service debt goes up. So there's that way in there. And I think it would iron out over time because expenses go up with GST too. So it's like it'll iron out over time. But I think we need it to innovate and create new opportunities in business and in property and all throughout Australia.
That's again where I think the comments that'll blow up in this one will be around capital gains tax. Anyone who mentions getting rid of capital gains tax discount is the one that usually gets slammed. But the property prices going up thing again is fueled by property being such a great area to make capital gains and get the discount. Maybe property isn't as highly sought after when you've got to pay tax on the full capital gain down the track. And then you start to look at franked dividends from a share investment portfolio rather than the property that maybe doesn't have great cash flow.
Yeah, but I think what we need to remember is the reason people are so protective of property and tax is because of the income tax that's paid. So if whoever you are, if you're going to start punching out comments, you need to remember that we're suggesting maybe property is taxed with the offset being lower income tax rates. And it's kind of sacred now because everyone's saying we pay so much bloody tax. Why should we pay it on our property? What we're saying is maybe you don't pay as much tax on your income, and property gets looped in there somewhere to a small amount. So you get a more even spread across what's taxed.
Yeah, if you're paying less tax and accumulating more cash, you're thinking about, if my property goes up 100 grand in 2 or 3 years, I've made 100 grand, and then you got the CGT or the 50% discount. But what if I could just get you 100 grand more in your pocket over 5 years because you're paying less tax? So yeah, you got to think about it that way. And that is where, look, we've talked about it quite simply here today. Higher GST, low income tax rates, maybe do something with capital gains tax. It sounds simple. When it comes to it, obviously, the people up in Parliament and government have got to crunch the numbers and do all the crazy things. And somebody's got to have the balls to come out at government level and suggest that this tax reform has to happen. By the time they've, tried to do things with super and, we've got all the government people fighting each other, which is annoyingly what they do. Labor, Liberal, whatever, they fight, they get against each other. The media makes a big show and dance of all of the kind of bullshit that doesn't really matter. And it's the same stuff over and over. And this is why I think we bring this up today to say change needs to happen. Someone's got to have the balls to come out and do it. And, I hope somebody does, because, what are we going to go another 5 or 10 years with the same tax rate from 25 years ago? Anyway, appreciate you listening. It's the mad rambles of increasing GST with Jace, Nick, and Marty. Thank you for joining us on the numbers game. Can't wait for your comments on YouTube. Please be kind. My security detail is with me at all times to protect me from whatever happens after this. No, we do thank you for listening. Please like, subscribe, and share with your friends too. I mean, the Numbers Game podcast, we do it to educate our audience and then friends and family. So please do share the good word. And until next time.
Sometimes you got to pay a bit to get a lot back. Game over.
This podcast is for educational and informational purposes only. The conversations are of a general nature and do not qualify as financial or tax advice. We recommend before you make any financial decisions, you consult a licensed professional. Individuals on the podcast may hold positions in the companies discussed.